Hey, welcome in. You're listening to the weekend edition of the Korelin Economics Report. Time out. Korelin, appreciate you joining me. This entire program is originating from the San Francisco Hard Asset Investment Conference. We're going to be recording all day today, Friday, and you'll be hearing it on the air, particularly you folks at station KUIK in Portland, Oregon, one of my favorite AM talk stations in the world, I have to add. Don McCown, the owner of the station, actually paid me to say that. Okay, not true. With Adrian Day right now, of Adrian Day Asset Management, let me say in the interest of full disclosure here, I'm in the process of opening an account with Adrian. He's going to be managing some of my wife's and my money. Saying that only because I want everyone here to know exactly what I am doing. How you doing, man?
I'm fine, thank you. Good to see you.
Hey, we're in some very, very interesting times right now. You know, it's people are just, they seem to be pulling out of the markets, whether we're talking about the resource markets, whether we're talking about the conventional markets. Nothing seems to be doing much right now except treading water or going down. I think people are scared to death, number one, and number two, I think this is a reaction, in the United States anyway, to the re-election of the president.
You know, the truth is, as you know, is that people have been actually pulling money out of the stock market. Retail investors have been pulling money out of the stock market for the last 4 years. Now, maybe that also coincided with the first election of our current president. But certainly for the last 4 years, retail investors have been pulling money out of stocks. They never got the rally, and they continued to pull money out. Now, in the last couple of weeks, of course, it's turned into an avalanche. As you say, I mean, I think there was first of all, there was a vociferal reaction to the re-election of the president, but there were also real reasons. One is the concern about the fiscal cliff. We can talk about that because, but the other thing, of course, is taxes. You've got taxes going up on long-term capital gains, and you've got taxes going up on dividends. And people say to me, why, some of my liberal friends, I do have liberal friends, some of them say, oh, you know, people are just overreacting to Obama being re-elected. Look at the stocks that have fallen the most. There's stocks like Apple that have long-term capital gains, and they're dividend-paying stocks. A lot of the dividend-paying stocks are down 25% since last week.
You know, what I find to be interesting, and this may seem like an aside, but I think it may be an indication as to how concerned our society is about what's going on right now, but some of the best performing stocks right now are the gun manufacturers. I mean, you know, it's funny, but isn't that the truth?
No, that's absolutely true. I mean, there's very few stocks that are doing well. The guns certainly are, and the only other stocks that I know that are doing well are the stocks that expect to be the beneficiaries of government largesse. And that's a sad indication.
I think that's an incredibly sad indication. Adrian, how do you feel about the future of precious metals? And I'm not talking short term, okay? I'm talking mid to long term. I'm not a short term guy at all.
No.
How do you feel about that?
Well, first of all, starting with the metals themselves rather than the stocks, I am extremely bullish on gold. I mean, what is gold but the antidote to easy money and the antidote to concern in the market? And the way that the central banks around the world are printing money now is only going to revolve to the benefit of gold. And when you look at the election that we had last week, that was also, not to be too short-term, but that was also very positive for gold. Number one, it removed the concern that the market had that Romney would get rid of Bernanke and change policies. I think that concern was overdone. I don't think there's another Volcker coming in anytime soon. But certainly Bernanke is staying in, and our current easy money and low interest rate policies are staying now. And then secondly, of course, the fiscal cliff. If you think about it, just think back to 18 months ago when there were those negotiations up to the deadline with raising the debt ceiling, and look at what happened to gold. Gold soared. So I think we're in a situation where we're going to see that again, frankly.
You know, getting back to what I was saying earlier, there is so darn much uncertainty out there right now, you know, and the thing that concerns me probably, Adrian, the most is we have a president right now who doesn't need to get reelected, okay? He's got a very, very definite, in my opinion, social agenda that's very, very different from mine, and I would venture to say, I would wager very different than yours, etc. I'm seeing some real belligerence on his part. I'm seeing a total unwillingness on the two sides of the aisle to compromise. And I have to tell you, our economy right now is very, very fragile, and if we don't get some degree of compromisation at the highest level, I think it's going to be a very, very bad situation.
Well, it's interesting you say that because a lot of the talk in Washington is about, there's a more conciliatory tone. I didn't see any conciliation from Obama in his press conference. I thought it was one of the most
absolutely none.
It was one of the most belligerent. I mean, he came out swinging, and I hate to say this, but I think, as you say, he's got an agenda. This business about insisting on raising tax rates on higher incomes. What are we going to get? We're going to get $84 billion out of that. That's a drop in the bucket. If we want to do something about increasing revenue, you've got to broaden the tax base. Broaden the tax base meaning everybody should pay something. Now, I hate taxes. I don't know about you. I mean,
of course I do.
No, but I mean, philosophically, I am opposed to taxation. I think it's a bad thing for a lot of reasons. But if you're going to have an income tax, I think everybody should pay something. Because otherwise you get the situation that we have today where 47% of the population do not pay taxes and 47% of the population are tax receivers. That doesn't mean they're bad people. It just means that they receive taxes from the 53% of the people that pay taxes. You're at the tipping point. Who are those people going to elect? They're not going to elect a person that says, I think you should start paying taxes.
Of course they're not, but you know what? It has to happen. I mean, if you look simply at a very basic income statement, when you have a company that's bankrupt, as the United States I would maintain is, let's use the word insolvent rather than bankrupt, okay? When you have a country, when you have an organization, when you have an entity, okay, that is insolvent, you've got to tighten up the income statement, and that includes both the revenue side and the expense side.
Well, but I do think that expenses the government spending is the key. Because
I agree 1,000%.
I mean, number one, if you raise taxes, you're only going to hurt the economy.
I would agree.
You raise taxes too much on higher incomes. A lot of higher incomes, this isn't just propaganda. A lot of the people in that top 1% are small business owners who have flow-through income. They don't have corporations, C corps. But so that income that, like I'm in that position. The income that shows on my tax return is my company's income. So you start raising income taxes too much on higher earners, you're hurting small business. That's number one. And then the second thing, frankly, is we know from experience that if you give government more money, they'll spend more money. So giving them more money isn't the answer. Cutting the spending is the answer.
I have to agree 1,000% with that one. I mean, Jeff Deist and I, Congressman Ron Paul's chief of staff, Jeff Deist and I have talked about that numerous times. It's a situation. Did you see the congressman's farewell speech this past week?
No, I didn't actually.
It was fascinating because Ron came out and basically said, we're heading for an iceberg that's going to sink the ship. For God's sakes, let's turn it around. But you know what? It's not turning around, and it's not going to turn around unless people realize what you're saying and what I'm saying. The importance of capitalism, the importance of a market that works, the importance of a market that will make everybody better off. You got the final word.
Well, no, absolutely, but you know, I don't want to finish on a sad note, but I will. You know, when I came to this country in 1974, there were certain things that attracted me to this country. The idea of hard work. There was a total lack of envy with people who had more money than you did. Everybody in this country seemed to feel that if they worked hard enough and were lucky, they could succeed. And there was no envy about the person who already had made it. Now all I see around is envy.
And that, in my opinion, is very, very sad. Ladies and gentlemen, we're going to be right back. Listen, you need to find out more about what Adrian does. His banner is on our website under the auspices of favorite sites. Click on it and get all the information that you want about Adrian Day and Adrian Day Asset Management. Thanks, my friend.